Futures have a positive tone as the market enters May with all-time highs. Today we hear the Fed's decision, tomorrow is the European Central Bank's turn, and Friday is the all-important jobs report. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are higher this morning ahead of the FOMC rate decision, and one day after the S&P made another new all-time closing high on Tuesday. So, Scott, what do you think traders are looking to hear from the Fed today?
I think they want to hear the same. They want to hear pace of purchase is still about $85 billion. They want to make sure that they're not worried about the inflation rate. But overall, you know, this is what the rally has been predicated on what the Fed's doing, what the central banks around the world are doing. So at this point, when their dual mandate has not been reached, because believe it or not, everyone, their dual mandate isn't for the S&P to be at all-time highs or the Nasdaq to be at 13-year highs. You know, granted, it's what they want to have happen because they want to create the wealth effect. But really, the dual mandate is to get to full employment and price stability. And at this point, we are far from full employment.
Well, it may not be part of their mandate, but a lot of people will be looking to see if the S&P can reach an intraday high today. What will be the levels you're watching?
Well, we're back at that 1597 area that we came off from 2 weeks ago. If you look here at the chart of the S&P, you will see that, you know, this is the macro trend from November that's been in place. It hasn't been breached. It hasn't even been touched. Okay, and then you have this intermediate trend line that we hit here during that Italian election crisis, so to speak. And then, you know, we had that pullback off the highs where we touched a 50-day. And listen, guys, you know, within this pullback, I definitely took some risk off. But we talked about the potential of a pattern that didn't get put in place. We talked about if the bears have control, they wouldn't let the market take back this 1565 or even 1570 or 75 area. So right around here is, I think traders said, okay, you know what, this time isn't that much different. You know, let's put some positions back on, maybe go a small portfolio approach. And now here we are, this level here of 1597 or so is that pivot that will be the next level that longs and shorts will dance around today. And
you actually just got back from a T3 conference in Boca, and I know you got to speak to a lot of traders out there. What was sort of the sense that you got from them? How did it go?
Well, first of all, they were excited, and it's so great when you go to a place and people are like excited to see you and they're like throwing fruit at you. Where you know, you have a lot of people in a room, and it seemed that every seat was filled, and you had people from all different ages trying to learn how to navigate the stock market. You had people who went to University of Miami there, all the way up to, you know, retired individuals that were just looking to add cash flow to their existing life. But what was interesting, Brittany, is that you know, flying home yesterday. Okay, I'm flying home, and I did a little walk up and down the aisles. And I remember, you know, over the course of the past decade or maybe, 13 years, that, you know, you could have walked up and down the aisle on a plane, and on those little TVs on the back of the seat, you would have probably seen 1 or 2 out of every 3 or 4 of those TVs on some type of financial network, whether it was CNBC, Bloomberg, who knows, whatever or whatnot. You know, they were on. Okay, and back in 2000 when we made, you know, the first time at 1550, which, if, you know, let's take a quick look at the chart here. You know, we've talked about this macro pattern. You go to the monthly pattern here, you know, on the S&P, and you will see that, you know, this first time here, you probably could have walked and seen it on 2 to 4 TV sets. And then I even think in 2007 when we put in this double top, you could have walked up and down the aisle on an airplane, and it would have been on maybe 1 or 2 out of the 4. You know what? Here we are at historic highs. And Brittany, if I tell you, out of, you know, what were there, 6 seats going across 40 rows, maybe 10 of them didn't have a movie playing. So it just goes to show you how this is such the most ignored rally, hated rally. Maybe it's because there aren't a lot of jobs. Maybe it's because, you know, companies are, you know, being too efficient, where they're just buying back stock, boosting dividends, and not hiring. But that's just the world we live in now. You know, at some point, hopefully it changes. If it doesn't, you know, there are things you can control, and that's your keyboard and your approach. And there are people like the individuals who came to our conference that are saying, you know what, there are stocks at historic highs, there are sectors making moves, there are patterns breaking out. I want to learn how to get involved, because even though I might have got burnt in the past, the market will be here tomorrow and well beyond myself. So, they want to try and figure out how they can make some money.
Right. Yeah, that's an interesting gauge of the lack of excitement out there, but there is still participation in the market. We're still seeing a lot of sector rotation right now, especially in tech. High beta is acting much better than it has been.
Yes, it has. And you've seen some life come back into it, whether it's been earnings that have brought some life back into beaten down stocks, or even some best in breed stocks that gave it some continuation. But, high beta tech has some activity once again.
Right. Take Apple, which is acting much better, just had a nice 3-day move, and I know you were actually able to take advantage of that.
Yes, and I did talk about it at the conference, and people on my virtual trading floor were able to see it. Last Thursday I kind of made a joke. I was on a plane, and I saw Apple gapped up, it got upgraded. I think it was the day after earnings, or maybe the day after, whatever it was Thursday. Gapped up above 407. It was trading 409. I'm like, let me put on some Apple. If it holds the gap, there's something different. And every time we've judged Apple, we've been looking for something different to give us some clues on some future action. So then I landed on Thursday, and it was still at 409. But I'm like, you know what? I had to stop in wherever it was, maybe 405, and I'm going to stay with it. And then the next level in my head was if it can get above 419. Okay, and then here's the chart. Okay, this was your earnings day. Okay, you take a closer look just right here. This was, your inside move right around here, right on that 409. I think this is when I was traveling. And then, boom, I said if we can get above 419, this would be an inflection point that it broke below. If you remember, that was that last short opportunity to add some, and I believe that's where I did. And then stayed with the trade for the past 2 days, got out of the last of it at 436-ish yesterday, and now we're at 442. Okay, so if you look at this, breaking above 419, 420 in my head was important, and then breaking above the 50-day was also important. Okay, so now you have your next resistance here in Apple around 469, and then really you have nothing in its way all the way up to about 515, which is the 200-day. So with that said, I do not have any Apple on right now, as it just had a 40-point move. So if it could maybe, it's up a few dollars today, if it can come in and rest and retest the 50-day, that's where I'll be looking to buy it. And if it doesn't, I'll see if I can get some kind of intraday tactical setup. But here was the last time we played a nice move like this, remember when it broke above this 435, 440, and then it broke above the 50-day, and then it stayed there for 2 days and failed. If Apple is any different, this time, if it does come back and test the 50-day moving average right around here, and let's just say the 8 and 21-day also play some catch-up, this is a spot to re-enter. This is a spot it needs to hold in order to continue to go. And at this point, just because it's extended does not mean it's a short. Maybe you look for a Q1 if you use this pivot right here of 445, but ultimately this has been a really nice move. But if you look at where Apple came from, okay, Apple has been in a long downtrend from 700, so this little move has not been much. So don't fight it if it's going to continue.
All right, well, let's talk Google, which, as money has flown into tech, has provided opportunities for traders to get involved along the way. So on a pullback, at what level might you be tempted?
I was looking at this before leaving right at around 803.50. Okay, it had a descending channel. It responded decently to its earnings, and at this point, this has been it's been not as hard to deal with as an Apple. This had a really nice move, went to 844, had a pullback. Earnings are out of the way. It still feels like they're one of the chosen ones. It's giving you some back and forth action even for traders. You look here at the chart and you will see this was the gap up to start the year. This is when it traded above last year's high, continued, then started this methodical, lethargic, whatever you want to call it, move to the downside and corrective phase. But overall, from where it came from, not so crazy. Then here is your move on earnings to break the descending channel. It pushed, held, now it's at 824. And I think as a macro investment, maybe you stay with it if that's what your risk is. But overall, I would say now as long as it stays above 810, it still looks good. And then at some point you have 844, which is the historic high.
Now, LinkedIn broke out to a fresh high yesterday. What would you tell traders who missed this move?
At this point, hopefully they didn't. There's been so many entries, and I think one of the last few we talked about was after Netflix's earnings, where like 178 to 180 is an entry, and then 186, and now here we are back above 190 before earnings. So traders were actually able to be involved without having to hold through on earnings risk. And if you look here at the chart, you will see best in breed status, definitely. Okay, here is where you had your gap up last quarter. Then it went up and went sideways and gave you another entry right here. fast forward to this consolidation, held pretty well. This was when, we talked about it trading above this 178-ish, okay, which is when Netflix went again, and then now here we are, 192. So at this point, if you're a macro investor and and you've been in it, as we talked about, this as being best in breed. Last quarter when it went above, it's a little trickier now. This is when it went above this 126, 127. Here is that basic cup and handle pattern, which we look for in new issues that have been public for a while, and boom. At this point, it's a little riskier, but I still think there's a lot of growth for Google. I think they could beat their numbers. I would say if you're a macro investor, stay with it. As a trader, I would just be a bit careful. If I were you, because there's a lot of premium in the options, do some kind of call spread. I know last quarter I took a call spread and I made money, but I was, I didn't fulfill my potential on it because it just went nuts. This time, even though it could be above 200, it could kind of be like Netflix, which I'll get into. What was
right.
Netflix next?
Yes, Netflix is next.
Right. Well, Netflix was next, and I just want to show you that Netflix was a little bit different this quarter. They did beat, and it did have a gap up, but it didn't have the same type of movement. If you look here on Netflix, you'll see last quarter you had a gap up, you had follow through the next day, and then it flagged and continued. Okay, this time you gapped up. You didn't get a day two like you had here because look how much further it's traveled, and now it's consolidating. So I would say be careful on back to LinkedIn that you take some kind of just option strategy because you think they're going to be good, but chances are the premium's going to be so high. I would at least do a call spread, like maybe buy the 200s and sell the 210s if you want to be involved, or just trade it after after the earnings. But again, and if you're a macro guy, sit in it because I think big picture, LinkedIn can go higher. Go back to Netflix. I do think there's an opportunity in the next few days here. You would think that after a big gap up like we just saw, you would see some kind of continuation. It tried yesterday and couldn't really go. So I would say if it could finally get above 219.75 and stay above it for 30 to 60 minutes in the course of a day, perhaps you get a squeeze back to the post earnings high of 224 and there above. If for some reason it starts to fail, here's your pivot support, which comes in around 209.51. But Netflix cannot stay too tight for too long, so keep it on the radar and look for volume one way or another.
There you go. So watch Netflix the next couple of days. But coming up, we're going to go in the trenches with 3D printing stocks, which saw some exciting action yesterday. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with 3D printing stocks. There's been some concern and uncertainty about this sector regarding how quickly the technology might be adopted, but 3D Systems comes out yesterday with double-digit earnings and revenue growth, lifting the whole sector.
Yes, and this sector emerged a few years back, and the technology is getting grabbed. Sometimes there are concept plays, and then when they actually get adopted and they start making money, they get the institutional support. And I think for myself, I was a little late to this group. I started looking at it a few months ago, probably right when it started to correct, unfortunately. But if you do have your proper exits, your entries can be a little bit sound. And if you look here at Triple D, you'll see this trend line that was in play for Triple D that got broken here happened in February. You had your high, you then had this wedge type pattern after a huge move like a lot of investors saw in this group, all the way back from 10 bucks, back in 2012, it corrected to the downside. Okay, and then from that, we figured out what kind of opportunity could we have. There was some kind of trading back and forth. If you remember, I think I had a little trade here right when it broke. I think it was right about 30.30. Okay, and it still wasn't ready. This was your more methodical buy. And then last week, it was an off the charts And I think, I got involved a little bit, but unfortunately, I don't know where I got stopped out, but sometime last week I got stopped out, and then lo and behold, earnings, boom, powered through a major level. So at this point, it's above all the moving averages. It's in the game. It's a decent trading vehicle. I would stay with it. I think that this group has a lot in its future. There's going to be times that, you get a bit of a correction like this, but as of right now, it's trending again to the upside. I would say now, as long as it stays above at least, just say 36 and 36.50-ish, or maybe even a little bit closer to 37, that it could go back, and the next area to test would be your 42.
Well, just to mention a couple of its peers, SSYS also had a good day on Triple D's report, rising over 5%. This company has earnings coming up on May 13th, so do you think we could possibly get another push before then?
Yes, I think if you're short this group, you're definitely a bit worried, because you didn't expect that type of movement back in these. And if you look at SSYS or SSYS, Stratosphere, or whatever it's called, Stratasys, it's always in the stratosphere. Anyway, here's where it broke down from, and this also broke a trend line right here. So if you got out of the way using high-level stops, this is when it put in its pivot low. Okay, and then same way we listed Triple D, I think at the same time I had a little bit of this going on, and from here it's had a really nice move. It's coming back into resistance. It might be a little bit harder for it to go because it's kind of moving with Triple D's earnings. So at this point, it's just it's still in the game. It's a little bit extended. Hopefully you made some money with it at this point. I wouldn't be chasing up here from the long side, but that also doesn't mean it's a short.
Well, I would assume you're also going to say the same for the XONE company, that we shouldn't be chasing here, because this is a new issue that had made a new high yesterday after a long win streak already of 5 sessions.
Well, this is actually a bit different, because I talk about new issues that could be exciting, that could be throw it in the drawer and get a real winner versus just a trade. And back I think a month and a half ago, first of all, it was a very successful IPO. We talked about the art of the first day of trading, and I think this was one of them that provided some opportunities. So it didn't create any bad memories by being overpriced, by shoving down people's and not working. But anyway, since then, it's been on the move quicker, because typically a new issue takes 4 to 6 months to get that price pattern to give you some kind of stability to get involved. But if you look here at XONE, you'll see that here was at first. This was not even the art of the first day. One day it gave you 2 days before coming back in and retesting, and then from there it followed this nice little trend and then broke this triangle to the upside. And then it's been a little bit choppy, but overall you look where it is. Here you are at 38.40. You could have been a buyer at just say 28. So that's a nice move. It's only been public for what, almost 3 months. And within this time period, it was in IBD once or twice featured, telling you the story about it, telling you how it's in the industrial 3D printing space, which has huge opportunities. So overall, learn how to trade this one. I know Steve LeVay, I believe, trades this all the time. He's been having some success, and the quicker you introduce yourself to a new stock and the activity and the composure and how it moves, the more familiar you get. So the more conviction you get that if it does move, you've already learned it and you can take advantage of the movement.
Right. All right. Well, let's do some quick hits here and talk First Solar, which continues to run, gained another 2.3% yesterday. And if you watched yesterday's morning call, we talked about this being a primary example of shorts getting squeezed. And can we see them
squeezed?
Exactly.
Well, and when the market pulled back over 2 weeks ago, it did not go in. It created this unbelievable bull flag to go from, and shorts were trapped. And if it doesn't go down when the markets go down, when it goes up, it's great to see something I'll follow through. And even on FSLR, which I don't love the group itself, this was your tier 1. I was in here a little bit also, then it started to go, and then boom, once it cleared this 41, this was your short squeeze. And now here we are continuing higher, but it's extended from the 8-day to 21-day. Granted, on the longer term chart, it does look like it can go. You have to actually go to the weekly chart to see where it came from. So all in all, you have a point of resistance right here, which is about 50. So I would just be a little bit careful, but if it consolidates in front of 50, your next void, you could take it all the way up to 60, and then 200 days at 76. So, to be a bit careful just rolling up shorts here with First Solar.
All right, let's talk Chipotle, which pattern is getting pretty tight. You may expect a breakout at what level?
Well, this one has this one was one of those momentum names that wound up breaking down within the past year. But it didn't really fall apart. Broke down, fall apart, 2 different words. It didn't have that Netflix move from 300, down to 60. But it did correct to the 200-day. And if you look at it on the weekly chart, here is your correction down to the 200-day. It's bounced off it. It's flagging right here. I guess if you go to the daily chart, you will see it's getting tight. So I'm sure traders looking at it right now after this wide range move. You know, this to me, if it can get above 367 and hold above it for more than 15 minutes, just say like a good hourly close during the day, perhaps it gets another squeeze higher. This could be on your radar as it's tight, and this is your price point right there, 367.
Perfect. And we have earnings out tomorrow from General Motors. What are the key levels here?
You know, the autos have been acting better. I know people have been talking about Ford, GM. These aren't like barn burner type moves, but for those who have like a portfolio approach on and that can't be in all, you know, fast moving, you know, scenarios, this has been for itself moving pretty well. You look here at GM and you'll see, you know, it's been stair-stepping higher with some patterns. This is when it broke above 28-ish, this descending channel, but, you know, had a nice move, flagged again, flagging again. It's just like it's stair-stepping higher like a lot of things in the market. So I guess above 31 it can continue. You know, let me take a look at the weekly chart just to see potentially where the next level is. And, you know, even on the weekly chart, this looks pretty good. Next level here on the weekly chart comes in around, what is that, 32-ish? So, you know, 32-ish, but again, when earnings come out and when you've had a stock already make a really nice move, you have to realize that, you know, earnings could have some volatility that day and have some kind of option plan too.
Right. All right. And finally, really quick, Qualcomm still struggling after missing earnings on April 24th. Some more downside in store?
Now, with earnings, there are two sides of like a really quality name on earnings reports. Like sometimes they have a huge hole, and then within 5-6 sessions, they say the street says, "Okay, who cares? That was last quarter, and let's see if we could buy it cheaply." You know, we've seen it. It's like we just saw IBM, but they also boosted their dividend and their buyback and whatever. You look here at Qualcomm, you will see that you have a huge earnings gap. Okay, a gap below the 200-day, which definitely stops some people out because anyone who gets stopped out, you know, goes below the 200-day. Lots of institutions or people use that as a rule. My rule is if a stock cannot take back the 200-day within 1 to 3 sessions, you know, chances are it's that weak. So we're approaching about 4 or 5 sessions where, you know, I do think that, you know, if it doesn't start to regroup soon, this big hole that you have in front of here is going to be just say the directional leader, so to speak, or give you the keys to further downside. It's a little unfortunate. You would think with the, you know, all the mobile, you know, handhelds out there and this and that I know they do have exposure to Apple, but they have exposure everywhere. Look how this one is gapped to the downside, and it looks like it'll continue that way. Where something like Broadcom, you know, gapped to the upside, and look how it gave it life. You know, gap to the upside, held in there, then broke above this, you know, key level we were talking about, 35. And now if you look at the weekly chart, just to throw it in here, Broadcom to me looks really good. Looks like it could be 38 to 40 before this is all done. So this one had a igniting gap to the upside, while Qualcomm had, you know, a basic igniting gap to the downside. So, you know, there are stocks to be short, stocks to be long. Just pressing shorts in this environment has been difficult. Same way with Amazon. After a huge gap down after earnings, I'm going to talk about Amazon. I'm just rolling along. I haven't been here for days. Deal with it. Here we go, Amazon. You know, this was your gap down in Amazon. Let's go to the daily chart, not the weekly, so you could see it. Well, actually, it didn't really gap down. It just, I guess, traded through it. You know, big move through the bottom end of major support. Held the 200-day first time. Okay, so now I would say watch it closely to see if, you know, people are going to give it a pass. They didn't give it a pass on earnings day, which they usually do. And now if it can't get back above these moving averages, chances are it could break down further. But yesterday's action, you know, definitely, you know, I think took some shorts. I don't know, made them a little bit frustrated because they thought it would have continued. But again, from where it was at 275 all the way down to here, usually first time you hold it, and then if you can't hold it after the second time, then you should get out of the way if it breaks it.
You're just running the show, aren't you? Anything else? Anything else? Is that all?
What was the word you used before? Metaphor?
Yes, that will come up. You didn't use any today. That's our new word for Scott's metaphors. But really quickly, it is the first day of a new month. We have Fed today, ECB tomorrow. What will you be focusing on today?
You know what? We didn't talk about it, but I want to see the banks. The banks that I went long almost 2 weeks ago, some like Bank of America and Citi and some of them, you know, they've been just hanging out here. So I would think in order for the market to maybe get a leg through 1600, you would think that the banks could get a little stronger. You know, a lot of people have been talking divergences when a group is actually resting instead of like out of play or consolidating. They call it negative. You know, we saw that in the Russell, we saw that in the transports, we saw that in the home builders where they had a mini correction and everyone was saying everything else has to come down because they had a mini correction, but meanwhile they all bounced where they had to. So real quickly, just to put up a chart of Goldman Sachs, this stock has, rallied below the, come up below the recent support, came back in there. If this thing can get above yesterday's high here of just say 146.50, and capture the 50, maybe the banks get some attention today. And again, every time we're at an inflection point, like today we have 1597, we need to see how we handle it on a short-term basis for traders. We've had 3 inflection points over the course of this year. We had first 1474 in the S&P. We got there in January, took it out, blasted through it. Then we made a high at 1530 before the correction. Went back to 1530. How are we going to handle it? We blasted through it, went to 1560. Okay, and then when we went through that, went to 1597, came off. So now here we are at 1597. So from a short-term basis, how are we going to deal with this level? Are we going to push through it, squeeze some shorts, come back below it, and then people will say, oh, we just did a push-through failure at the highs? Or are we going to push through, hold above it? Anyone who's been rolling up shorts gets squeezed, and we go to 1620 first. At this point, nobody knows. So we'll see what happens with the Fed. They don't have a big conference, so it's just some statements we'll be rolling out. We'll see how the sectors act. At this point, I still think that looking for quality longs and holding swing positions have been working a lot better than looking for cute shorts or weak stocks, especially from a macro basis. Because when you're at all-time highs, people who have bought monthly S&P funds, 401ks, 529s, whatever they've done, they're probably sitting in good shape, versus those who are just trying to outsmart and say, oh, the market can't go up because of this, the market can't go up because of that. Meanwhile, these are all thoughts and opinions, but if they look at price, the price has been saying the market can go up, for who knows why.
Right.
So you don't always need a reason behind it.
All right. Well, before this becomes your afternoon call, happy trading, everyone, and have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.